Okay, to our second company, ASX-listed Dart Mining. Now, it's got one of the largest tenement footprints in Victoria. Its exploration portfolio focuses on orogenic gold, porphyry, precious and base metals, strategic minerals, including lithium. Now, in fact, Dart was the first exploration company to discover lithium on the east coast of Australia in 2016. James Chirnside is the managing director and chairman. James, it would be good to see you. If you can put your camera on and we can hear you as well. Thank you very much indeed. I'm handing over to you.
Thanks very much, Sarah, and good morning or good afternoon, everybody. Great to be here. It is, as Lord Ashbourne said, as the previous speaker said, very exciting times in mining. The last couple of years have been very difficult, I think, with cost pressures. I think investors have had a fairly hard time, but now we've got the commodities themselves coming to life. I think it puts a bit of a different spin on it, and investors are starting to take notice. I think Alex was just saying that he got a different buzz from the mining conference that he's attending in London, and actually I was there earlier in the year and I noticed the same thing. It was just beginning to stir. So I think that's where we are. But let me get on to our presentation, and I'll be fairly quick through the first part of it, and then we can spend a little bit of time on each of our projects. Tim, are you sharing the screen from your end? Thanks very much. That's great. Okay, so we left it to Tim to operate the clicker, if you like, because we may have internet issues at this end. Tim, if you could flick forward, please. Forward-looking statements. There's a profile on the company. We have 3 directors. We're ASX listed. Our stock code is DTM. We've got 258 million shares on issue. We are a paltry $8 million market capitalisation. We have actually had a pretty good run this year. I think our share price has doubled since March, and that's as a result of people returning to the market, looking for companies with valuation and leverage to the exploration game. Next one, please, Tim. Okay, so my observations, and these are only my own, but I have spent many years in equity markets, in metal markets as well, trading as a fund manager as well, and I follow the markets very closely, just like I'm sure everyone here today does. The precious metal complex has performed very strongly over particularly the last 5 years. Silver and base metals have caught up. I think silver's lagged gold's lead a bit, but that is beginning to look more interesting. Copper and some of these energy transition metals have performed pretty well, and I note that copper is now trading through 5 US cents a pound, or $10,000 US a ton as of yesterday. So that's a good move. I note that Goldman Sachs also have longer-term predictions of a much higher price for copper. Copper is potentially suffering from the perfect storm in a way, where we're starting to see greater demand for the metal through electrification, energy transition, and we're also starting to see some fairly severe constraints on the supply side. So copper's a good metal. There was a bit of a false run on copper a couple of years ago, and it didn't work out terribly well. It didn't go terribly far, and no one made any money out of it. But it does appear now to be moving finally. So the things that are driving the gold market, particularly, I'm sure most of you would be aware, are the central banks. I was curious to note that Walmart and Costco are both selling gold over the counter, and it's hard to know exactly how much, but I've seen speculation of up to $200 or $300 million a month is being sold in the US through Costco and Walmart. So I think that's interesting. There's obviously a great deal of revived or renewed interest by retail buyers, but also in China, where you can buy very small denominations of bullion, and the demand from there has been very strong. So to me, really, it remains a central bank game. I mean, they're the ones that do the volume. The Chinese central bank has a publicly stated objective of owning as much gold as the United States, and I think last look was that the Chinese central bank, or the People's Bank of China, had something like 2,500 tons of gold, versus what is reported in the US at about 8,500 tons. So there's a lot of tons to buy there for the People's Bank of China if they want to match the US. Technically, as Lord Ashbourne very cleverly spoke to earlier on, technically and fundamentally, the precious metal complex, including gold and silver particularly, but not restricted to those either, is very constructive and remains so for the foreseeable future. The interesting thing, and I was at a conference last week in Sydney, and the topic of conversation was all around the lag effect on equities versus the metal prices, and that's very real. So gold equities, if you're a producer, you've had a pretty good 6 months or 12 months. If you are a developer, as we saw with Barton just before, who are right in that space, that they've had a very good run, but others in the developer space have not had such a strong price performance. And then you trail off into my part of the world, which is in exploration, where the return on the exploration sector up to the end of 2023 for 2 years was minus 80%. So a lot of investors have lost a lot of money over the last couple of years in the exploration space, particularly. And a lot of that actually came as a result of the lithium crash last year. There was some it was a very overcrowded trade, I suppose you could say, both in the physical, in China, where it was being held in warehouses and financed, very heavily, very levered positions on the physical, but also in the equities themselves. So equity prices really have, got a thrashing last year. There are signs of life in lithium now. It has recovered off its lows. I think 5.5% lithium concentrate got down to a low of about $850 a ton. That's off a high in November 2022 of around $8,500 per ton. So enormous decline in the price of lithium last year, particularly. So the sector's a bit on the nose, certainly at the exploration end. The sector's been on the nose for quite a long time. In fact, a very long time, last couple of years. But we are really starting to see genuine investor interest in it. And as is typical in these sort of these moves, the money, institutional money, starts with producers and safe bets and Newmont and companies like that, and then it slowly dribbles down into the smaller cap market companies, and then into the developers, and then ultimately into the exploration space. And I think the second half of this year is going to be really interesting from that perspective. So we'll see how it goes. Tim, could you flick the slide for me? Thank you. I'll just walk you through very quickly our corporate objectives and our profile. We are always looking for new and interesting bits of ground to go and explore. There's a lot of people who are prepared to talk at the moment because a lot of smaller companies have had trouble raising money. They're really strapped. And so we are actively having those kind of conversations with people. And I'd sincerely hope that sooner rather than later, we're able to land something that might make a really big difference to us. We have got enormous amounts of our own prospectivity, and I'll get to that in a moment. But the ways of doing at a corporate level, you can attract inbound farming joint venture type relationships. You can also go on the hunt, and we have our own drill rigs, so we're able to actually drill for equity into other people's projects when they don't have the cash to do it themselves. And our costs of drilling are very, very low compared to the market, less than 1/3 of what you might pay a contractor for drilling. So we've got our own drill crews and rigs, and that allows us to drill for equity at a low cost to us in cash, but charged to the joint venture partner at prevailing market rates. So that's quite a good little model. I'll talk a little bit more about inbound farming joint ventures. We have a joint venture agreement with SQM. SQM are one of the largest lithium companies in the world. As Sarah mentioned in the introduction, Dart Mining we were the first people to discover lithium on the east coast of Australia. We actually had originally initial discussions with SQM back in 2018. But then the market for lithium crashed after that, and then it recovered, and I think most of us know the history. But we have a very good, healthy relationship with them. They are funding all of our exploration costs in relation to our Doorchap lithium project, which I'll get to fairly soon in the presentation. So our operational profile, moving away from the corporate, is that we're very self-reliant. We do all of our own geological assessment and modelling. As I mentioned, we run a couple of drill rigs with drill crews. We have field crews that we send in to do geochemical sampling and rock chip sampling and things like that into the field. That model or that setup works extremely well for us. I think we also have our own transportable camps and all that sort of thing, which enables us to really cut the cost of exploration. I would say that Dart Mining is probably one of the lowest cost explorers in the country. We don't pay accommodation because we're transportable camps. Other advantages that may not come off the top of your head with a transportable camp is that you can put it on site, so you don't lose time every day commuting to the nearest hotel, which could be an hour away, or 2 hours per person with 10 guys in the field. Suddenly the hours log up and the work's not getting done. Tim, if we could move to the next slide. So we've got a very large footprint. Most of it, in fact, 99.9% of it, is in Victoria. A lot of that footprint is up in the northeast of the state of Victoria, which is the high country. Hence the orogenic gold prospectivity that we have, or geology that we have. So the footprint actually includes about 80 different geological targets and projects across what we define as 6 different work areas. Within the footprint, we have 9 historic gold fields, and we are furiously drilling one of those gold fields at the moment. That project is called Rushworth, and I will get to that. The other thing that sits within our footprint are a number of porphyry targets. Porphyries are, for those that don't know, very enormous tonnage, typically fairly low grade, with pretty much any kind of metallic dominance. And in our case, it is molybdenum, but mixed with that molybdenum, we have copper and zinc and silver as well. That's Mount Unicorn, which is a bit of a flagship project. It's in resource, 209 million tonnes of fairly low-grade molybdenum. From my perspective, it remains a exploration target. We need to drill it more, but exploration around porphyry targets is incredibly expensive. Deep holes, lots of them, can get expensive. So that is a good example of a project, for example, that we would be looking to farm out, to do a deal with someone with deep pockets who wants to come in and gradually earn in to the economics of that project. So the diverse geological setting, as I mentioned, orogenic gold, porphyry, and we also have, it's a historic tin mining area with lithium, cesium, tantalum pegmatites. So they're all fertile. All the pegmatites that we've come across are fertile with lithium, and we've had some very high hits on cesium, funnily enough, and there's lots of tantalum there as well. But the project, and we drilled 3,000 meters on Dorchap last year. It's currently subject to approvals on some permitting where we need to put some tracks in, and we've got a planned 3,000 meter diamond program, which we're hoping to get to in the second half of this year, subject to the permits being or the applications being approved. Next one, if we could, please, Tim. The last point on that last slide, and there's no need to go back to that, but we sit within the quite famous, certainly in geological circles, Lachlan Fold Belt, which is an enormous geological structure down the east coast of Australia, which has led to some of the most prolific and productive mines in the country's history, including one up at a place called Orange, Cadia is the name of the mine, where they're producing around 1.2 million ounces of gold per annum. It was owned by Newcrest, which, as everyone would know, have been taken over by Newmont. So they're mining gold up there at less than a gram a tonne, but because there is so many tonnes and they do everything on site, including pouring the actual gold, it is a very profitable mine. But that's a great example of one of the big mines on the Lachlan Fold Belt geological structure, which runs from basically Cobar up in New South Wales all the way down into Victoria through where we are, and then out to the west towards South Australia. It doesn't make it to South Australia, but it out that way. So our work schedule, and I spoke at the Master Investor Conference this year back in March, and I have since updated this work schedule. We've got drill ready 3,000 meters of diamond drilling planned for the Dorchap lithium project. The permitting applications have been lodged subject to approval. When we get the approval on those and subject to a further improvement in sentiment and price in lithium, which is, I think, very likely in the second half of this year, we will go out and begin drilling on that. Rushworth is the other priority project that we're working on right now, and we're literally drilling there pretty much continuously. I think we've just finished around 1,000 meters on our what we call phase one, which is testing the structural aspects of a prospect within the Rushworth gold project. Rushworth is a gold field from historic times. It was mined from about 1860 through to 1910, I think. There was over 100,000 ounces of gold taken out of that gold field at the time. We have about 861 square kilometres of ground, which includes the entire gold field. And we're just north of our neighbours, who are Southern Cross Gold, who have had a tremendous success on their Sunday Creek project. They're literally just south. And actually to our southwest, about 40 kilometres, 30 odd miles, is the famous Fosterville mine, which is one of the highest grade producing mines in the world. Significant production, I think up to 300,000-400,000 ounces a year. And they're yielding on that mine. It's underground. The deeper they go, the higher the grade gets. And that's, I think they're producing at an incredibly low all-in sustaining cost. But they have actually run out of reserves. They've had something like 24 rigs operating there for the last 2 years, trying to prove up more resources. haven't been able to extend it at this stage, but there still is potential for them to do so. Anyway, we're
James,
45 kilometres. Yep,
James,
are we done?
sorry, you're overrunning. So if you want to just wrap up, if you want to
Yeah,
summarize.
well, okay, well, that's the Rushworth and Dorchap projects. We're working on those. They're our focus. Just go to the next slide, Tim, can you? Which is some images, and that brings us pretty much to the end. So we drill at 1,200 metres in the snow. We drill in 45-degree heat out on the plains. We're sufficient with camps, provide all our own discounted fuel, water, you name it. And that's Dart Mining, and thank you very much for having me and listening.
And you've got your own drill rig as well. Very, very important in this climate, James. Very, very quickly, you've been prospecting for 21 years, starting in 2003. What's been the most exciting discovery, or has it yet to be made?
Look, I think you can't deny the Mount Unicorn molybdenum project. It's the sixth largest molybdenum deposit in the world today. It is low grade, but it's porphyry, so bulk tonnage, 209 million tonnes. I think the other exciting discovery, and it was straight out of left field for us, was the lithium back in 2016. It's the only lithium project on the East Coast. Everything else and Australia produces 50% of the world's hard rock lithium. So most of them are coming out of Western Australia. We have the only one on the East Coast. So between those two and the 9 historic gold fields, we love gold at the moment. We've got a very, very busy and very prosperous next few years, we think.
Many thanks. Many thanks. James Chirnside, Managing Director and Chairman of Dart Mining. Thank you very much indeed.